Welcome everyone to HueFin News. Today's December 3rd, 2018, the home of the 2-minute price prediction, as well as giving you all the news according to the charts. Now, if you can see here on this particular website, we're going to talk about the truce that is between China and the United States taking a halt in their trade war momentarily. And we're going to ask you all the question, is now the time to sell the rally? Okay, so as we go throughout this article, we're going to look at those three major indices, the NASDAQ, the S&P 500, as well as the US Dow, to see whether or not this can be a move that can be sustained, and as well to give you some things that is going to occur over the next 90 days, because this truce or this halt to the trade war is only for 90 days. Okay, so nothing drastic or dramatic has changed over the weekend regarding China and the United States and this trade war. They are just simply putting a small stop to the increase in tariffs, as well as the selling of U.S. agricultural products to China. Okay, now this is the article by Barron's, written by Ben Levison, and the title of it is called "Trump and China Called a Truce in the Trade War. Now What?" That's the question that we're posing to you all today. Should we sell this rally that is currently going on in the market for Monday? I went ahead and highlighted some of the things that I think is pertinent and important for you all to see and realize. And then once we go ahead and look at the price chart, we should come up with a better depiction as to whether or not this rally can be sustained. Now, the U.S. said it won't impose 25% tariffs on Chinese goods in January, so that is a part of the halt. China also agreed to buy more U.S. agricultural goods. Both of these things are very positive for the market, which is one of the main reasons why we are seeing these three indices up about 1% right now. The bad news this article goes on to read is that this deal opened a 90-day window to negotiate a deal, and not just on trade, but also on protecting intellectual property, ending the forced transfer of technology, and even more. If these negotiations aren't successful, then those tariffs that Trump has been talking about increasing on $250 billion of product will go into effect. Okay, so over the weekend, you guys heard there was a lot of hoopla about how important the meeting is going to be between Xi and Trump, and today being the first financial trading day in the market, and nothing really has changed. No agreement has been made, just simply a halt in the negotiation process to try to give both parties enough time to try to work out a negotiation deal. Now, within these 90 days, if the market, or if Trump and Xi, United States or China, cannot come to an agreement on all these very huge and important issues regarding intellectual property, tariffs, and trade, then we will see the continuation to the downside to happen. Okay, and I also want to make mention that around March 29th, okay, which is going to be around the same time that 90-day halt between the U.S. and China tariff is over, is when the UK is supposed to exit the European Union. So the first quarter of 2019 definitely looks like it's going to be very interesting. The volatility should be still ongoing beginning half of 2019. So literally, I'm telling you all now to buckle your seats, because we could see some very drastic moves to the upside, to the downside on a regular basis in the world financial markets. Okay. It is unclear how the market will react to the news, given last week's massive rally. The S&P 500 saw almost a 5% rise, the biggest it's seen in about 7 years. But you got to think, okay, the market is forward thinking, they're forward looking, so they're not thinking about things that has occurred in the past. They're trying to anticipate the things that will occur in the future. So the question becomes whether the typical sell the news reaction kicks in. That's the question that we're asking you all today. Should you sell the news of the market having, or the United States and China having a halt on their tariffs on this trade war? Should you sell that and get out before we see the continuation to the downside occur in the market for these world financial markets? There's one thing that is clear: the stakes in the negotiations between the U.S. and China are huge. This is what Paul Asworth, the chief U.S. economist at Capital Economics, wrote. If the talks fail, tariffs would rise on the $200 billion of goods already on the receiving end and would be imposed on the remaining $250 billion that are so far without any tariffs. This is very much a temporary pause. So it goes on with the fact that nothing has changed. So the rally that we're seeing today in the market definitely is just like a relief rally. Okay, we've been the whole month of October, some of November, we have seen some very dramatic decreases in price for all sectors. Okay, this is just a relief rally. So as we continue to go out and look at these price charts, which we're about to do now, keep that in mind. Okay, so we're looking at the NASDAQ chart right now. This is the monthly chart for the NASDAQ, and you can still tell that we're trading within the consolidation. The month of October was very dramatic to the downside. We did see a lot of volatility into the market, and even in the month of November, we did receive a lot of volume into the market as well. And the spread of the bar is minimal compared to what it was in October. Now, as we move it on to a weekly chart, you should be able to see a better depiction of where resistance lies for the NASDAQ. It's right there around 7,200 points. Okay, so considering that fact, we can continue to move to the upside in the near term within the 90 days that this truce is in effect. Okay, it might be even a slim probability for us to come up to around 73.30, but again, we are not making any true movement to the upside. Considering last week and how it was such a positive week, we are still forecasting the NASDAQ to continue to move higher in price. Now, granted, I have already highlighted that the 7,200 price area is the resistance. Looking at it on the daily price chart, you can even tell right now we're getting some stockpile coming to the market. So we're hitting right here around that resistance of 7,100 points. If we cannot even break that, then this is going to be a very short-lived rally for the NASDAQ. Okay, now considering that last week was very positive, I'm still continuing to see the NASDAQ trying to move to the upside, but we have to keep in mind that the move has been so quick throughout the non-trading or the after or the pre-trading pre-market hours that we could have already came to a resistance at 7,100 points for the NASDAQ. So you still have to keep in mind that we are not out the woods to see this particular market moving to the downside. Okay, so as of right now, near term, short term, yes, the NASDAQ is forecasted to continue to move to the upside, but 7,100, 7,200 points is where the resistance area currently lies in the market. Now, I will be looking at the NASDAQ to see if we are able to maintain more volume, because if we are, then we will increase the likelihood of us breaking those resistance areas. So now we're going to go ahead and look at the S&P 500. You can see here that even for the month of October and November for this particular market, the S&P continues to show us its inability to try to break down to lower prices. Okay, so 2,600 points is where support is. I do not have a support line drawn, but you can tell that that is where support lies for the S&P 500. And right here around 28.25 is where the resistance area currently lies for the S&P 500. As a matter of fact, we have already came on the weekly chart and touched this area as resistance, and it's been about 3 weeks since we've seen the S&P 500 come to that resistance area. So it's one of the main reasons why we're seeing some weakness coming into the market right now for the S&P 500. Now let's go ahead and see what's occurring on the daily price chart for the S&P 500. You can tell that this is our third time coming up there to our towards our resistance line, and that can definitely indicate some weakness into the market for the S&P 500. Okay, we're definitely seeing some stockpile coming to the market now. If we're able to stay above 2750, as we're seeing some weakness coming in on the daily price chart, then the S&P 500 is going to try to break that 2825 in or around that point area to the upside. But right now, you still have to be a little bit cautious in the market for the S&P 500, because we will not move higher until we're able to break this particular line. So this week is going to be very important for all three of these markets, the NASDAQ, the S&P 500, as well as the Dow. Okay, if we're able to break above these resistance areas that I have drawn on these charts, then we will continue to move to the upside. 2850 will be the next resistance area for the S&P 500, or even right here to this previous high during the beginning half of 2018. Okay, so right now, definitely this is a rally that is ongoing. I do like the fact that on the weekly chart, we did end up last week closing towards the high of the bar. Still shows us that we have some potential to continue to move to the upside. But as always, I have already pointed out to you that 2825, which has already been touched for the S&P 500, is where the resistance area lies. So again, if we're not able to see some volume come into the market this week, then we will not be breaking that resistance area. I'm telling you that now. So now let's go ahead and take a look at the Dow. This is the monthly chart, and as you can see, we're just bouncing to and fro between support and resistance. Support is around 24,000 points, and the resistance area is around 26,100 points. Let's take a look at the weekly chart real quick for the Dow. And I do like that last week that we just concluded. Definitely shows us that upside movement is in store. I have pinpointed this resistance area already. So just like what I just said, if the volume for this week does not come in like what we've seen here over the last month, 2 months, if that does not come in, then definitely this is definitely a false move to the upside. You want to be careful with that. But overall, considering last week, definitely shows that we might be making all-time highs in the Dow within this 90 days pause that the trade war is currently having between the US and China. Okay, so the resistance area first is around 26,100, 200 points, but then again you can see that close behind that is the next resistance area, 26,650. So again, I'm still expecting these three markets to continue its move to the upside, but this week pay attention, because if the volume does not appear, then we may continue to move to the downside next week as well. And that means that this move that we're currently seeing in the market today is not real. It is false, and this would definitely be the opportunity to sell the rally. Okay, so looking at the price charts today, HueFin News definitely maintains that this is an opportunity to sell the rally, because the US trade war with China, there's nothing concrete that was agreeable to any of the parties. So the next 90 days is going to be it's going to be real volatile between all of these three indices. So you definitely will have to keep your eyes on the markets to see exactly what we're going to do. And right now, these charts are definitely showing us continuation to the upside. We have identified the resistance area for you all on all three indices. And I'm also telling you now to make sure that you pay attention to the volume as we continue to move to the upside. So that's our opinion. We would like to know what your opinion is about this whole situation between the US trade war with China. Tell us, do you expect these markets to continue to see upside movement, or do you think that this is just a false move and we should be selling this particular upside move in the market? Again, make sure you all leave a comment in the comment section of the video. And if this is your first time watching this content, make sure you subscribe to this channel and like and share this content as well, because this is how easy it is. This is how the financial experts read the price charts. Make sure you all maintain your profitability, and I will see you all later.